A lot of data out for the Netherlands today, including unemployment rate, consumer confidence and household consumption. So what are they indicating for the country and its place in the Eurozone? I'm joined by senior economist with ING, Dimitry Fleming, to find out. So Dimitry, looking at data out today, the jobless rate was slightly up last month, consumer confidence was above expectations, and household consumption rose 2.2%. It appears that people are less worried about the economic climate and more prepared to spend money on major purchases. Are improving conditions in the housing and labour markets and a pickup in private investment becoming the key drivers of recovery?
Yes, you see domestic demand is firming up at the moment. Households are spending again, helped by rising confidence. You've seen the numbers today. There's real wage growth again, and there's a stronger labour market. The data today showed that unemployment jumped. There was a small uptick, but it's mainly because people are encouraged again. They are re-entering the market again. So, but on balance, you see that the economy is creating jobs again. So that's supporting spending.
And the IMF has warned that weakness in global trade represents a risk to the very open Dutch economy, saying it expects 2% GDP growth in 2016. Last week, we saw the Netherlands' GDP rise by just 0.1% in the July-September quarter. Is this an indicator that the economy is feeling headwinds from outside forces?
Yeah, indeed. Last week's numbers, the 0.1% growth in GDP in Q3 was rather disappointing. And indeed, if you look at the details, if you look at the sectors, you saw industry was actually, the output was declining in that sector. So that was rather a bit of a surprise. And it is the sector that's most exposed to global demand. So indeed, you see that there's an effect of Chinese demand slowing. If you think that China is a very important export partner for the Netherlands, and not only direct trade, but also indirectly, we export a lot of goods to Germany, and those goods go into German products, and they export that to China. So indirectly as well, China is very important for us. If you look at the PMI indicators, the Purchasing Managers Index, at the start of Q4, it's not really pointing to a quick rebound in the industry. So at this moment, if you look at the Dutch economy, domestic demand is firming up. But if you look at the more externally focused sectors, they are showing a bit of weakness.
You mentioned Germany there in regards to exports. There has been a lot of noise concerning VW and the impacts that's had on the German economy. Do you think the economic relationship between the Netherlands and Germany is at risk because of this?
Oh, indeed, there is a risk, of course, because we export a lot of materials for the German car industry, so we are exposed to that. But if you look at the latest industry data for the Netherlands, you see that also in chemicals, in machines, there's more than just one sector within industry that's at this moment performing weaker. It's a broad-based weakness at this moment, and of course we hope that it's only temporary.
And after announcing its large-scale QE program earlier this year, the ECB has indicated they're ready to extend QE. We've touched on the unexpected weak growth in the euro area and emerging markets, which could hit the Netherlands. But what can we expect if the ECB does decide to make a move on QE?
Well, in our base case, we see the ECB lowering the refi rate further to 0% at the moment, and the interest rate on the deposit facility also, we're going to lower that as well in our base case. And you talked about QE. Well, we expect them to step that up a bit. And of course, this all means that the downward pressure on money market rates will increase, and they will stay like that for some time. What this means for consumers and for businesses, well, of course, lowering borrowing costs. Mortgage rates in the Netherlands at this moment are already at historic low levels. They're going to stay like that, so that's good for the housing market and that's good for domestic demand. I think also for businesses, that effect of even looser monetary policy in the Eurozone and probably a rate hike in the US will mean that the euro will come down further versus the dollar. And a cheaper euro-dollar, well, the exporters are going to like that, I guess.
So while people are less worried about the economic climate, there are some areas where the Netherlands is feeling exposed. We'll be looking to see how this develops over time right here on Dukascopy TV, so make sure you keep clicking back.